Stop. Before you open that next envelope from your city assessor, you need to hear this. In 2026, 10 American cities are about to hit homeowners with a property tax tsunami that could force you out of the home you've spent 30 years paying for. If you're over 50 and living in any of these cities, the next 8 minutes could save you thousands of dollars or your entire retirement. Let's go. Here's what nobody's telling you. While you've been celebrating your home's rising value, local governments have been quietly weaponizing that equity against you. Cities across America are facing massive budget holes, and they've found their favorite ATM machine, your property assessment. For those of us in our 50s and 60s, this isn't just about numbers on paper. This is about whether you can afford to stay in the home where you raised your family. In 10 specific cities, the catch-up is happening right now, and 2026 is the year it all comes due. Question for you. Have you checked your latest property assessment? Drop your city in the comments. Let's see if you're on this list. Number 10. Boise, Idaho. Boise became the escape hatch for Californians seeking affordability, but the dream is turning into a nightmare. The city just approved a property tax collection increase of over 7%, and here's the kicker. They're clawing back taxes from previous years using loopholes. In neighborhoods like the North End and Harris Ranch, home values jumped 90%, but the homeowner's exemption? It's barely keeping pace. If you're living on a pension in Ada County, the state's 3% cap sounds good until you realize the city uses new construction and annexation tricks to pile on hundreds, sometimes thousands, more dollars. Question: did you move to Boise for the low cost of living? Is it still low? Let me know below. Number 9. Austin, Texas. Everyone loves to brag about Texas having no income tax, but guess what? The money comes from somewhere, and in Austin, it's coming straight out of your home equity. In Travis Heights and Zilker, valuations have absolutely exploded. Even with the over 65 exemption that freezes your school taxes, the city and county portions keep climbing like a rocket. Travis County recently bumped senior exemptions to $70,000, but when your home value jumps $300,000 in 3 years, that exemption is a joke. You're being taxed based on a cool factor you never asked for and can't even spend. Number 8. Raleigh, North Carolina. 2026 brings a massive revaluation bomb to Raleigh. In neighborhoods inside the Beltline and North Hills, even if the tax rate stays flat, your bill is exploding because your home is now worth so much more on paper. The median home value in Wake County has hit $450,000. If you're on a fixed income and your assessment jumps 40% in one cycle, your retirement budget just got shredded. Question: are you in Raleigh? Have you gotten your new assessment yet? Share your story. Number 7. Charlotte, North Carolina. Charlotte's recent reappraisals have been absolutely brutal. In Myers Park and Dilworth, residential values have climbed over 60% since 2021. And here's the worst part. While commercial property values rose, residential values rose faster, meaning homeowners are now picking up a bigger slice of the city's bill. If you've spent your life building equity in Charlotte, 2026 is the year the city starts charging you a premium just to keep the keys to a house you already own. Number 6. Phoenix, Arizona. Phoenix used to be the affordable retirement capital, not anymore. While the state is introducing some relief for veterans and surviving spouses, the city of Phoenix is staring down a multi-million-dollar deficit. In Sun City and Arcadia, you're seeing transaction privilege tax hikes and property tax levy increases that chip away at your savings every single month. The state's 5% cap on primary residence growth helps a little, but it doesn't stop the city from piling on new fees for parks, transportation, and public safety. Fees that show up right on your tax statement. Hold on. Before we hit the top 5, I need your help for just 10 seconds. If you're feeling that pit in your stomach right now because you've opened one of those tax assessments, you're not alone. I'm building a community of homeowners who want to protect their hard-earned equity and navigate these years with some common sense and real information. Here's what I need you to do. Hit that subscribe button so you don't miss the next warning. Drop a like if this information is helping you. And comment below with your city and whether you've seen a jump in your taxes lately. I read every single comment, and your stories help me know what to cover next. All right, let's keep going. The top 5 is where it gets really serious. Now, the next 5 cities are where this isn't just a tax increase. It's a crisis that could force you to sell the home you plan to retire in. If you live in any of these places, pay very close attention. Number 5. Nashville, Tennessee. Nashville, Music City, but for long-term residents in East Nashville and Bellevue, the tune is getting expensive. Nashville was the first in Tennessee to offer a tax freeze for seniors, but here's the catch. The income limit for Davidson County is only about $37,500. If you worked hard and have a decent pension or 401k, you earn too much to qualify for relief, but not enough to cover a $2,000 annual tax jump. You're stuck in the middle while infrastructure costs get loaded onto property owners. Number 4. Seattle, Washington. In King County, living in Ballard or West Seattle has become a straight-up luxury. For 2026, voters are looking at new levies for parks and trails that add hundreds to your annual bill. Yes, there are senior exemptions, but the thresholds don't account for Seattle's insane cost of living. We're seeing what I call a silver exodus. People in their 60s selling the family home not because they want to, but because property tax and utilities have turned their biggest asset into their biggest expense. Question: are you considering leaving Seattle because of taxes? Let me know in the comments. Number 3. Las Vegas, Nevada. Vegas promised freedom and low taxes, but in Summerlin and Henderson, there's a hidden staircase effect crushing homeowners. Nevada has a 3% cap for primary residences, but that cap applies to the tax amount, not the assessed value. This means even if the housing market cools off, your bill can keep climbing 3% every single year until it catches up to market value. In 2026, homeowners who bought during the boom will hit that 3% increase again. Compounded on top of previous years, it's a slow-motion tax hike that never takes a year off. Number 2. Tampa, Florida. This is where it gets really serious. In South Tampa and Seminole Heights, property taxes are only half the battle. When you combine 2026 assessments with Florida's ongoing insurance crisis, homeowners are being squeezed from both sides. While the state claims insurance rates are stabilizing, Floridians still pay 4 times the national average. If you're a senior on a fixed income paying $5,000 for taxes and another $6,000 for insurance, you're effectively paying rent to the government and insurance companies for a home you already paid off. That's a disaster. Number 1. Miami-Dade, Florida. Miami is ground zero for this crisis. In Coral Gables and Pinecrest, the Save Our Homes cap limits your assessment increase to 3%, which sounds great until you try to downsize. If you move, you can port some of that savings, but the new property is often assessed at such a high market rate that your taxes still double. For 2026, there are proposals on the Florida ballot to eliminate non-school taxes for seniors. But until that passes, residents are stuck paying some of the highest effective rates in the country. It's beautiful, but for many, the price of staying is just too high. Question for Miami residents: are you considering moving because of this? Where would you go? Comment below. So what do we do? First, stop looking at your home's value as pure profit. It's a liability if the tax man is using it against you. Here's my advice. Homeowner to homeowner. Check your local millage rates. Don't just look at your home's value. Look at the rate the city is charging you. If you're over 65, check your county's specific income thresholds for freezes or circuit breaker programs. Don't assume you don't qualify. Apply anyway. And get vocal. In states like Florida and Arizona, new relief bills are being debated right now. Your voice matters with your local representatives. We've worked too hard to let a reassessment notice steal our peace of mind. Final question. What's your biggest concern about property taxes in 2026? Drop it in the comments. I want to hear from you. Stay informed, stay vocal in your local elections, and guard your equity like your retirement depends on it, because it does. Thanks for watching. I'll see you in the next one.